It's 100% about relationships. Ben and I talk about this all the time. You got to think of everybody as a family member. You got to think of everyone with your fiduciary duty to make sure that you've done your due diligence. Now, like anything else in life, you think you got it all figured out and something goes wrong. But the most important thing is communication. If something were to go wrong, and I don't care if it's your lender, if it's your investor, if it's your best friend, or if it's your wife, if something's not going the way it's originally planned, you must get in front of that because there's a solution to every problem. Hiding from it is certainly never a solution.
If something does go wrong, be upfront with your investors, include them, not to exclude them, be inclusive, and have a plan. Understand how to problem solve. I mean, I'm the Six Sigma. I'm a problem solver type of guy. I've done this for 2 to 3 decades already, and I love people. And so I think that's what it has to get down to the basis of everything. It's about people and telling the truth and what's going on.
Yeah.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
What if the most boring asset class in real estate was actually one of the most profitable? Well, actually, it's not all that boring if you're making a lot of money. What if the key to raising millions in private money was not hype, but precision, partnerships, and process? And what if you could scale faster and safer at the same time? Welcome to Raising Private Money. I'm your host, Jay Conner, and today's episode is a masterclass in how serious developers think, build, and fund at a high level. Well, today I'm joined by Bill Kanatas and Benjamin Salzberg, the co-founders behind a platform that's quietly dominating Class A self-storage, multifamily, and mixed-use development across the country. Now, Bill is the visionary deal maker, driving site selection, capital strategies, and partnerships with the biggest names in self-storage. Now, Ben is the operator. He's the engineer, strategist, thinker brain, systems builder who's delivered over $50 million in operational savings while scaling assets designed to last. Now, together, this duo, they've built a development machine that investors trust and private capital follows. Now, if you want to understand how sophisticated operators raise money, mitigate risk, and win long-term, this episode is for you. You're going to meet my special guest right after this. Hello, Bill, and hello, Ben. Welcome to Raising Private Money.
Thank you. Welcome. And thank you for having me on.
Thank you so much for having us on here.
You got it. So excited to have you guys on. So let's go ahead and dive in. I've got some really good friends that are in self-storage. And when I hear them talk about self-storage, on the surface, a lot of people just think it's boring. But for goodness sakes, you all have built an entire platform around it. So my first question is, what makes self-storage such a strong investment, say, compared to some other real estate classes? And secondly, why do sophisticated investors, private lenders, keep allocating even more capital to it?
Excellent. It's a great question. So I come from a multifamily background. I developed a lot of real estate in the past, single family homes, et cetera. And I have a lot of respect for multifamily operators. But the reality is tenants come with turnovers, toilets, trash, and a lot of legal risk as well. In self-storage, we do have customers, but it's much simpler relationship than signing a lease with a long-term tenant a year or so. There's no midnight maintenance calls. There's no eviction court. There's no laws that stop you from eviction. If a customer stops paying, it's a lien process. It's not an eviction process. It's not a 6-month legal battle. So as much as I love multifamily, this is a simpler solution in my personal, humble opinion.
Excellent.
We really are helping people. This whole self-storage, people when they get divorced, they have to put things, they have to put their stuff somewhere. People downsize, people die, unfortunately, and people get displaced. So we are offering a product to help people out.
I love it. I love it. Well, you're in the service oriented business, that's for sure. Now, I want us to talk about how it is that you actually create value. So, this can be a multifaceted answer. I'll let you address it any way you want to. But I'd like for you to take us step by step through your development process from identifying a site all the way to turning it into a stabilized cash flowing facility.
Sure. I'll take this, Ben, if you don't mind. So we're really data driven, and we look for population density, income levels, competition, saturation, traffic counts, things like that. I also come formerly from developing car washes, and that one of the things that you want for car washes is looking for traffic counts, right? So we look at the traffic counts, also barriers to entry. Last thing you want to do in Texas is famous for that. You build a self-storage facility and you're about to open, and down the street opens up another one. So barriers to entry is something very important. Zoning restrictions, obviously, but we work very closely with the villages and the cities. Sometimes we negotiate tax incentives like a TIF or a 7B that's attractive not only to us, but also to the village to be able to bring in the tax dollars that they maybe are not getting from a property that's just been sitting vacant all these years.
Right.
Ben, you want to add anything to that?
Yeah. This is like Bill said. This is very data driven. I spend a lot of times analyzing analytically, what areas we should go into. Looking at the demographics, current existing self storage facilities. But this isn't something that we just choose, say, put a dart into a dartboard and say this is what we're going to build. A lot of work goes into it. There's a lot of analysis. Me being a Six Sigma Master Black Belt in quality, I understand the analysis and statistics, what needs to be looked at, what the proper numbers are. And so this is a really hard process to locate and to identify a successful area.
So you all have raised millions and millions of dollars in private money, private equity for your real estate deals. And with that, you've worked with institutional level operators, private investors, private lenders. What do you all like to lean towards? Do you all like to lean towards investing in an existing storage facility and then, upgrading that, creating or increasing value? Or have you done any actual new construction of self-storage?
So both. So actually, as we speak today, we'll be breaking ground next month on a new facility that is outside of Chicagoland. And this one's going to be 114,000 square foot of gross rentable square feet with about 873 units. And all the units are climate controlled. It's a 3-story facility that'll be operated by Public Storage. And another one that we have in our portfolio right now was a closed down Burlington Coat Factory that we bought. It was, blighted in the area, closed down for about 3 years. And we came in and breathed life into it and created another facility. So we look at all opportunities.
I got you. In your all's experience, and you've got a lot of it, what would you say are the key elements that differentiates or separates a great self-storage deal, say from an average self-storage deal, before the first dollar is even raised for it?
I mean, I think the location, first of all, is number one. You have to, choose a proper location, and if it's an existing facility, looking at the numbers and see how that pencils out. A great facility would be, some good great demographics, the need and the demands and all the studies are there. That'll be a fantastic self-storage facilities. A lot of it in the Midwest that we concentrate on, and we do it all over the country. But right now we're concentrating on Midwest. The rates are pretty stable and looking pretty good. And so that's a very successful facility. And so we want to start on a really good foot. Bill and I do a great job doing that. And I'm really happy what the turnout is so far and the future that holds to us. So, really it starts at number one is the identification of where you're going to put and build these developments.
Bill, anything to add to that?
No, I echo what he says. It's very important. We always like to say you got to find that diamond in the rough, right? They're out there. You just got to look for them. It's very common for Ben to be looking at 20 or 30 properties in a week that brokers from around the country are sending to us. And we do all of our analytics in-house, and we have a very good trusted executive counsel that works with us that's been in the business for 25 plus years individually. Collectively, we're all over 100 years in self-storage. And we rely on our executive counsel and people like Public Storage and Extra Space that look at these deals with us to make sure that we're going to develop in an area that we all believe in.
Right. And we're not, I'm part of the elected self-storage association in Illinois here. And so we have a lot of experience on identifying and giving back to the industry of self-storage. So we're pretty much on the top of the diamond per se, right? The triangle, to understand and look at what's going on, the heartbeat of the industry. And we have many people that are part of our executive panel committee, and that we really understand what's happening. And that's what makes us, kind of differentiates us between the rest of the group, is having that great family of professional people that have been in the industry for a long time. And we love people. I mean, I think the number one thing to be successful is about people. And we love people, and we love working with people, and we love what we do.
Well, I can already tell that for sure. So let's say someone is interested in investing in a self-storage facility as a passive investor, not an operator, not a visionary, but a private lender, a private investor, and they've never done it before. What should they look for in a deal before putting money into a self-storage deal? And maybe what are some of the red flags that they should avoid?
So all investors that we brought into any of our deals in the past, we try to mitigate as much of the development risk as we can. So Ben and I and our company will spend the money up front to get it entitled, tying it up, spending money with your architects, your engineers, obviously your phase one studies, and in some cases you might even have to do some cleanup, as we did on our last project. The investor should come in when it's time to fund and go vertical on the deal, and usually at that point the sponsor should have his proceeds, his loan, his sources and uses all put in place, secured the financing, and secured the money that's coming in as the equity, and obviously goes into an escrow account, and it funds like any other real estate deal. What I'd be cautious of is spending money before the sponsor has the property either under contract or is about to close on it.
Gotcha. Anything else on that, Ben?
No, I think that he summed it up pretty good. There's always a process that we go through, and that's if you think about it, every step of the way, we look at those particular processes to make sure that everything's understood.
Y'all have been doing this for a long time. Over 30 years, I think?
Yeah, on the development side, yeah. Not necessarily in self-storage, but on the development side, yeah.
Right. So on the self-storage topic, if you're like me, you've made your share of mistakes. I've rehabbed and flipped over 500 houses, and I still make mistakes. I still make mistakes. Hopefully I don't make the same ones over and over again. But as you all look back to when you started in self-storage, what were some of those early years mistakes that would turn into advice for someone that might be interested in becoming a developer themselves? And what would those mistakes be to avoid and lessons learned?
Sure. I think for me, it's really important to choose the right general contractor that has experience specifically to self-storage. When you're talking general contractors, they may say, oh, this is nothing more than a vanilla box. It's an industrial building. It's really simple. It's the HVAC, it's an elevator. There's really not too much behind that. And really that's not entirely true. I mean, there's truth to that. It is a vanilla box. It is an industrial type building, but there's a lot of nuances in there, right? Where does the fire sprinkler go? If you're going to have a little cage above the your self-storage facility in order to be able to hit it. The doors, you have 833 doors or 900 doors that are all revolving. They're like little garages. So if those aren't installed properly and something goes wrong, you certainly don't want to be, chasing your tail later and you find out that you're a month behind or 2 months or even 3 months behind on construction, because everything is timing and everything's a dollar, right? If you don't open up in time, you're losing revenue. So it's important to have the right general contractor to make sure that they've made the mistakes so you don't.
Ben?
I agree. I think also when you have a design, you want to re-engineer that design even from an architectural point of view, because to build it is different than to draw it out. And so you want to put value-added initiatives back in there, and you may want to, not strip out some of the products or siding or what have you, but to re-engineer, maybe lower costs of different types of siding, different types of material. They may save you money. And so you have to look at the whole design and to see, where you can save while, building these particular buildings. And so, being an engineer and understand, reprocessing everything, redesigning everything, once everything is done on paper, you have to figure out, well, okay, how can I build this now? And what can I use to substitute certain things that will make it work and to be more cost effective, not only for the building itself, but for the investors.
Absolutely.
That makes sense. Raising private money is not just about returns. It's about confidence, relationships, trust, clarity, all that. So with that in mind, what do you all believe makes your investors, your private lenders feel safe sending you 6 or 7 figures into your projects?
I think, first of all, a couple things. One's experience. You want to make sure that this is not a first-time investment, that somebody's building self-storage. It's 100% about relationships. Ben and I talk about this all the time. You got to think of everybody as a family member. You got to think of everyone with your fiduciary duty to make sure that you've done your due diligence. Now, like anything else in life, you think you got it all figured out and something goes wrong, but the most important thing is communication. If something were to go wrong, and I don't care if it's your lender, if it's your investor, if it's your best friend, or if it's your wife, if something's not going the way it's originally planned, you must get in front of that, because there's a solution to every problem. Hiding from it is certainly never a solution. So we've been blessed. We've had great investors. We've had family offices. We've had funds. We've had family members. And the key to that is always communication. Do what you say you're going to do and mitigate as much risk as you possibly can for your investors.
I love that, Bill. Ben?
Be upfront. If something does go wrong, be upfront with your investors. Include them, not to exclude them. Be inclusive, and have a plan. Understand how to problem solve. I mean, I'm the Six Sigma. I'm a problem solver type of guy. I've done this for 2 to 3 decades already. I love people, and so I think that's what it has to get down to the basis of everything. It's about people and telling the truth and what's going on.
Yeah.
Bill, one thing you said really resonated with me. You said there's a solution to every problem. My wife, Carol Joy, and I, we were so blessed to meet John Maxwell last year. He was our keynote speaker for one of the mastermind groups that we're in. And one thing I'll always remember, one thing he said in his keynote address, he says, not every problem has got a solution. He said, every problem's got multiple solutions.
Yeah.
And that's, having that kind of mindset is so important in business. And I love what you said as well, Ben. Communication is key with your private lenders. Be transparent, be upfront, and, communicate, let people know what's going on. Now, one thing that was very impressive, y'all've got a lot of great stuff going on, but one item that's so impressive is y'all have saved over $50 million through operational excellence. And so with that in mind, in y'all's opinion, where do you think most operators leak money? Where are the holes in the bucket after a project is built or, has been turned around? And how does your systems project profitability in the long term?
Well, I think a lot of these companies don't have processes in place or proper processes, or they're broken. And so in our self-storage facilities, make sure that the customer is contacted right away, what's going on with any of the, make sure that the money is flowing properly, the phone calls are being answered at a fast rate, make sure that the property itself is being kept up. So there's a lot of process behind that. And so making sure that there's a process in place and tying that process into customer appreciation, customer focus. So it's all about process. And so making sure that that process, first of all, it really exists. So that's what's most important. That's what most companies don't have, is a process. And so we make sure that everything is done and everything is dotted and all T's are crossed. And so, we save a lot of money by understanding, the entire process from A to Z.
Bill?
I was going to add to that. So some of the operators that we talk to are smaller operators. And when I say smaller, they might have 2, 3, 4, 5 facilities, but they're not managed by publicly traded companies like an Extra Space or Public Storage. And what we do is we have ours managed by institutional operators such as Public Storage, and they have the systems in place as well. Now, Ben works with them closely, and we look at the budgets on a monthly basis. Could we save something else? Where did that money go for? So it's not like we just give them the reins and they run off. We still watch and manage the process. But when you have big companies like that have been doing this for 50 plus years, and they also have the buying power, right? So you can get that landscaper that might be better at our building, or the fire alarm system, et cetera. I'm just giving you a couple of examples. So working with the larger operator that does have these systems in place, and then making sure that you do too. And then driving that revenue. When do you increase the rates? Do you wait seasonally? Do you wait after 3 months, 6 months? How do you keep pushing the rates? What's the competition doing? All that stuff is very important to watch, because you don't want to lose that tenant either, right? Once they're in, the likelihood of them leaving is not great. However, at that same point, somebody may leave if they see another opportunity down the street, and they can save some money, especially in today's time.
I get it. Regardless of the asset class in real estate, markets change, cycles turn, capital loosens up, capital tightens. What trends are you all seeing in self-storage space right now? And are you having to adapt your strategy in any kind of way?
So when somebody asks me why invest in self-storage to begin with, and I like to say that self-storage really offers something that's really unique. It performs well in good economies. It performs even better in bad economies, if we're going to be honest with you. It's resilient to the recession, scalable. It's driven by life events that Ben and I always like to talk about. People are downsizing, business needs, and more, et cetera. We always like to say the 4 Ds: death, divorce, dislocation, and downsizing. These are life events. Those are never going to go away. In fact, there's more reasons to use self-storage. So I don't see self-storage going away anytime soon. It's been here forever. There are some people saying, well, it's getting oversaturated. There is truth to that. Just like in the car wash business, when we exited that, there was a lot of saturation. But there's still buckets of places that require self-storage. There's people migrating, to Arizona or to Florida. People are leaving California, going to Nevada. So there's always going to be people moving for a reason. They're always going to need self-storage. They're building homes that are smaller, no basements. I'll give you an example. Homeowners Association says you can't keep your boat parked in your driveway anymore. So everybody, as they're growing, even the younger generation that don't want a 3,000 square foot home, they want a smaller place. Well, they're going to need self-storage too at some point.
Ben, did you have anything else on that topic?
I would just echo what he said. The tertiary markets, those pockets that need self-storage, very, very important. They're building, as you can see in back of me right here, the condos are 10 by 10, 8 by 10 bedrooms. You need storage. Where are you going to put that? And so and the industry is more welcoming to self-storage now. People are more apt to rent self-storage. So I see huge growth from now to many years from now.
Yeah, very true.
that's sort of answering my next question. I was going to ask you to fast forward 5 years. That's hard for me to do. But do you see self-storage evolving? Do you believe there's going to be bigger and more opportunities for private lenders and investors to, come on board with you?
I really think so. I think especially the tertiary markets, I think in those markets that are not saturated, we have a lot of development still out there as they start building these new apartment buildings, condos. I see a lot of self-storage, the need for that, a lot of demand.
Absolutely.
And I don't think you and I will be here by the time that there's absolutely no demand. I think it's going to always be a demand for right now.
Yeah.
Excellent.
Go ahead. I was going to say, I think the future, I see different uses with self-storage. So to give you an example, could there be a first floor laundromat where people have extra income coming in by using the laundromat, or potentially have a car wash that can drive through the building? Can you put apartments above and do 5, 6, 7 stories of multifamily in communities? So I think over the years, we're going to see more uses. I know Costco is doing a project, I believe it's in California, with multifamily in there. Our architect actually has drawn up some sketches for Ben and I for multifamily above self-storage. I see other businesses, being part of this self-storage arena in the future. And at the end of the day, success in storage and in real estate in general, to be honest with you, it's about relationships. So we already covered on execution and obviously patience. And if you can find good partners, individuals, family offices, funds, and you build a great product and you stick to your fundamentals, then there's a lot of opportunity for growth in this sector.
That's fantastic. Now, if someone listening here, and I'm sure we have many, that would like to reach out to you all and maybe discuss some opportunities on investing with you or whatever, what's the best way to have a conversation with you?
Ben, you want to tell me?
Yeah, you can reach out to www.self-storagedevelopers.com. You can, I believe I have it in my background right now, or you can give me a call back, us back at 847-338-5517. I have another phone number as well. Yeah, you just put it up on the screen there. Yeah, either way, we love to talk to anybody that is just curious about self-storage or wants to learn more about us.
Wonderful. Again, that website is www.self-storagedevelopers.com, and your contact phone number and everything will be in the show notes as well. Bill, thank you so much for joining me here on Raising Private Money.
Thank you so
much. We appreciate it.
Thank you.
You got it. Well, my friend, if you're listening in here on the show, if you got value from today's episode, here's the big takeaway regarding private money. Capital follows clarity, clear communication, and transparency. Clarity comes from the process that Ben and Bill were talking about. Well, Bill and Ben didn't win because they chased a bunch of hype. They have won because they built systems, as Bill was talking about, reduced risk, and earned investor trust before asking for the money. And if you're listening right now and you're thinking, well, I want private money to chase my deals instead of me chasing investors, then you're in the right place. Make sure you follow this podcast, Raising Private Money, because every episode we break down how real operators like Bill and Ben attract capital in the real world. No theory, no fluff. And if this episode helped you seeing raising private money differently, do me a favor. Share it with another real estate investor who's tired of missing out on deals because of missing out on funding and capital. I'm Jay Conner, the Private Money Authority. Thanks for listening, and we'll see you right here on the next episode of Raising Private Money.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.